Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, June 26, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, we have something similar to what we had yesterday and the day before and the day before that. And what I mean by that is she's running sideways, eating time off the clock. Looking at the bigger picture, we have the last Thursday's solstice turn, we'll call it. Markets run up into those events, those tinfoil hat events, or they run down into them. And not every time, but many times, they do have a shift in the other direction. For every ending, there's a new beginning. For every new beginning, there is an ending in the future. That doesn't just apply to markets, that applies to everything around us in and around our lives. Over the last 4 trading sessions, since the drop after the summer solstice, the market has been trading sideways in a bearish, flaggish type of formation. When you look up here, the last 4 days, you could say this is trading in a very narrow channel. Now, does that guarantee that the market's going to go lower out of this channel? No, because what's dominant? The dominant thing is the trend. On the daily chart, your trend is up. So she could still drop out of this channel on the daily chart and stay above the 20-period moving average, even spike it through above the trend line, fill the gap, come down to the last breakout area of 533.07. We talked about that. You've known about that for a while. She can stay above all that and still remain bullish, and it would have been or will be, if she does that, unless she does something more, just a pullback within an uptrend. Put that on a sticky note. She can break the trend on the upside. If you take this channel once again and you take the upper portion of the channel, you say, well, if she gets above that line and starts pushing above, closing candles above intraday, daily candle above, 2 days above, it's breaking the chain, and that will reopen the door to run a test of last week's high, a la the solstice high. Fair enough? Fair enough. Just to reiterate from a weekly chart perspective, we have an on-time week. We also had an on-time day into the solstice. We have an on-time week last week. We have a tail and the on-time week around the summer solstice. When 3 guys tell you you're drunk, go take a seat for a while. Big picture, above all the moving averages, trend is your friend, but pullbacks happen within the uptrend. Both things can be true. From a daily chart perspective, let's just say this area here, we'll just draw a box. That is a support box. They don't have to get to the bottom of the box. They don't have to stop at the top of the box. But that box is a support zone, give or take. Inside the number members, certainly will have the refined specific number on an as-needed basis. 4-hour chart, we looked at this last night. She's still riding the 4-hour home base or 20-period moving average. That doesn't make it any more bullish or bearish than yesterday. It's just a factual information piece. She's riding the 20-period moving average in a bearish eating time off the clock after a move down formation. The 2-hour chart was riding underneath, was capped underneath the 20-period moving average until the end of the day when she popped back above the 20-period moving average. Should we take that as gospel? No, it's just above the 20 moving average as of the end of today. We don't know where they'll open tomorrow, but this is still a bearish pattern until it's not. We had a move down. We have a sideways eating time off the clock formation. This is bearish. Generally speaking, you're looking for a move down out of this formation until or unless she breaks the chain. How does she break the chain? By getting above 546.95. That breaks the chain of the bearish pattern. It happens to be to the number where the top of the channel is in this drawing, the top of the trend line, 546.95 Above breaks the chain. Inside the number members, by the way, will remember we have unfinished business, and you'll see this later when we go over the notes, at 547.15. Funny how that works. Hourly chart looks no different than the 2-hour chart. It's just got a longer flag, if you will. How'd we do in the live room today? Any participants in the live room? You know the routine. Help a brother out. What's going on in the live room? Are you making money? Are you learning? Are you learning how to make money? Is it beneficial? Are you finding value? Are you making money? Have we mentioned that yet? Post a comment under the video. Let others see what's actually going on. Post the good, the bad, and the ugly. If you think it's ugly, post the ugly. If you think it's good, post the good. If you think it's great, post the great. Trader's choice. Inside the numbers today, we had some nice scalp/day trades in the live room. We'll get to that in a few moments. Early on, market was trading up a little bit. It was 546 as the pivot. Now watch this. I adjusted it later, and you'll see that market started trending lower during the pre-market session, closer to the opening bell, so we had to shift things around. You have to make decisions and changes in real time based on market conditions. But watch this. The pivot today was 546. Fair enough. At least the early pivot before the change. How you doing? Right of the vertical is today's activity. 546 is the horizontal blue line. The arrow is pointing to the end of the day where they went all the way up to capture an important number that was my early pivot at 0:30. For those of you that don't know, very simply, a pivot is above she's bullish, below she's not. If she were to get above this pivot during the trading day, there were other numbers above. Closing candles above the pivot was bullish. If she was going to be above there this morning, we would have been looking for higher numbers. It's an important number. The pivots are magnetic, and you could see what happened at the end of the day. The magnet drew price right into the early pivot. 546, important number. In fact, that was an important number on the board yesterday. How you doing? Also at 0:30, we had a flip side situation below yesterday's close. Opens the door for 543.70. There's another important place. 543.70. You see what's going on in this box? The market found it important, opened below, stayed below for a few minutes, got above, and then it became support. Dropped below, went to another place. We'll get to that later. Hold your horses. Keep your panties on. These are numbers identified while it's still dark out. Remember the routine. Pause the video, go back to the charts, and double check the work. Now let's see what we have at 8:45. Still 45 minutes before they're open for business. We had a bit of a pre-market turnaround situation. Okay, fair enough. Creates opportunity. That's what we're looking for. We've got three numbers of interest down below. Very simple. 543.70, we talked about that one. Oh, there's another one. 543.07. Let's go check that one out. There you go, 543.07. See how this begins to work? They don't have to get all the way down to 542.30, but can. That was the third number on the board. Represents unfinished business. We had a flip side situation. Let's see what happens at 9:05. Here's the update. Thieves in the morning have already paid a visit to the first support number, 543.70. Fair enough. 543.07 is the next stop down until or unless they recapture, meaning get back above 543.70. That's the bull case for a bounce. Staying below 543.70 is the bear case for the lower stuff. Now 543.70 is our early pivot. Remember what we said before? Pivot's now in green. Above the pivot, she's bullish. You could tell what happens here. Above, she's bullish. Below, she goes to the next number. That's what we discuss. That's what we teach. That's what the morning trade is based on. No change to the support zone. We're given the zone again. Here we go, 9:33. Within the support zone and just short of the second number at 543.07 so far. Back above 543.70 is the bull case for a bigger bounce. Right out of the gate, there's your bounce, base hit from within the zone. The rest is trader's choice, and you can see what's going on here. Traders got this trade, came back down, and they had a play it again Sam situation. There were 2 morning trades off the initial zone and the retest of 543.07 this morning in the live room, inside the numbers. We had plenty of participation. Pause the video, read the notes, go back to the chart, and double check the work. Remember, we're not only giving entries, we're giving where it's wrong. We're also giving exits, meaning resistance. So here at 9:48, you see staying above the pivot, 543.70, opens the door for 544.50 to 544.78. And there in the red lines and the arrow lies your resistance zone. Look what happened when they came up to it. Little resistance. They went up to fill the gap. That was the second number. Resistance came all the way back down to what? The pivot. Did we have traders that picked off the pivot there? Yes, we did. Did we have traders that picked off 543.07? Absolutely, we did. We had them both. We had double barrel and even triple barrel traders this morning. What more can you be looking for? Entries, exits, where it's wrong, where resistance is, what happens if, all that stuff. Pause the video, read the notes, go back to the chart, and double check the work. Now, case in point. Above the pivot, this is at noon for the afternoon. Above the pivot, the door is open for 544.78. Okay, fair enough. Well, they did that a couple of times, but it's still open for them to do it again. But above that, and the door is open for 546, give or take. What happened into the end of the day? 546, give or take. How you doing? I'm not suggesting that a trader was riding it up there into the close because of what I said 4 hours earlier. That's not what I'm saying. What I'm saying is, if you have the numbers, you don't know how and when they're going to do everything, but you have 3/4 of the battle if you have the numbers. Remember, read the notes, go back to the chart, and double check the work. What do we have for stocks on the move today? We had Geis or General Mills, APTV, and Love. Love didn't hit its entry objective. It's off the board. We're going to take a look at Geis and APTV. General Mills getting a buzz cut at the opening bell. As you can see, we had a really, really good support zone. Unfortunately, they opened below both these numbers, negating these numbers officially from a painting by the numbers, following the rules, treating it as a business. This trade was off the board. However, we did have participation in the live room by traders willing to just buy it under the second number, looking for a bounce in real time. That's fine. This is what was posted. They opened below the numbers, but you can see the numbers work. This was certainly today's support zone, bar none. How about Aptiv, APTV? 66.73 was the first number on the board today. The opening print was exactly 66.89. They spiked it, ripped it back up in the other direction. Just minutes later, they were at a high of 69.27. In minutes, you're talking $2.50 on a $66 stock. That's a rip-roaring rocket ride from a day trading, scalp trading in a few minutes perspective. There's a 1-minute chart. Who doesn't want to be in that one? And then just to further prove the point about the numbers and they work, look what happened in the afternoon. They had to get to a place in the afternoon. They tried it late morning, tried to rally back, fell again, and look at the low over here. Low in this candle, 65.18. Low in this candle, 65.13. What was my number? 65.15. Funny how that works. And that's not a question, it's more of a statement. Now, what's going on over in Camp IWM? Still below all the moving averages on the daily chart, really making a bearish type of situation, downtrending, lower highs. This low here from Monday, the 17th, the low is 197.41. That's your bogey. That's been our bogey. Staying above that low, she's got a chance to try and rally it above or at least into those moving averages. Giving up that low, good night, Irene. Pretty good rally day for Team Transports, the folk down at the transportation department. up 1.5% today. Federal Express or FedEx had a nice rally today, bringing up the transport average. Guess what? We are participants in the transport space. Lazy swing trader. We're in Frontline. Bought it at $23.80. I've already taken profit. It's a risk-free, emotionless trade. Still going higher and was up today 1.5%, commensurate with the folks down at the transportation department. Funny how that works, isn't it? We did something similar with the financials about a week and a half ago, didn't we? Yeah, the answer is we did. Did some work after the market closed today. Came up with 15,563 as a target, magnetic, and overhead resistance. Write it down, put it on a sticky note. Remember, closing the week above the convergence of those moving averages, the 20 and the 50 period, that will be a bullish signal. Not saying they will do that. I'm saying if they did do that. What about the Q people? Anything change over here? Anything going on over here? Just eating time off the clock in a bearish, flaggish formation within an uptrend after the solstice turn. No change to the spiders or no change from the spiders. We're still working with an on-time week with a weekly tail. We take it at face value. Closing the week above last week's high, that's simply off the table. However, today, it's information we do know, it's on the table, and we can't unknow the information. Little bit extended from home base on the weekly chart. Tail candle, can she come back toward home base? Maybe run a test of the breakup candle low over here, right around 461, 462. Absolutely. Would that be detrimental to the tape? Would it change the trend? No. It's normal garden variety market behavior. If she trades lower for a couple of days or a week, the media will be pulling their hair out, but it's garden variety market behavior. Markets go up, they pull back, they reset, they recock the gun, they go up again, they pull back, they do retracements, they find support, they go up again. That's what happens in uptrends. Look at the chart. Market goes up, pulls back, goes up, pulls back, goes up, up, and up, pulls back, goes up, goes sideways, goes up, pulls back. That's the way the market works. What about the financials? Right back below those moving averages. We're using $40.36 as a bogey. Get below that, and there's another leg lower. Back above all the moving averages, and the trend will once again be your special friend. Chart looks different than the NASDAQ, different than the S&P. We didn't have any kind of on-time week situation, anything like that. It's a different chart. We treat each chart independent of one another. Above all the moving averages, the trend is your friend. Give up last week's low or $40.36, either way, and trouble ensues. Last week's low on a Friday close, not intra-week, daily below $40.36, and you can start paying attention. What about smash mouth? Another down day, about 1%. Sorry, about 1/3%, 1% after the market, meaning MU, which reported earnings after the bell, is trading lower. So we could take a look at MU, and they're trading all the way down. They were all the way down at 126 or 127.8, something like that, from a close of 142.36. It's not that much, but it's something. Back to the SMH. What was she doing? What has been she doing? What has she been doing? Reading both forward and backward. Above the moving averages, riding the 20-period moving average, eating time off the clock for 3 days on that average. This can be a bearish flag in the making. She can certainly go up tomorrow. She can go down tomorrow. It's a bear flag in the making as of today. We take the market at face value today. Can MU bring the SMH down tomorrow? Absolutely. We'll see where she opens tomorrow. What's happening after hours now could completely flip around, by the end of the aftermarket session today or by tomorrow morning's opening bell. What happens after hours stays after hours. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I am David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.